Hello and welcome to the Coal Authority podcast. The Coal Authority exists to make a better future for people and the environment in mining areas. We carry out vital work to keep people, drinking water and the environment safe from the legacy impacts of our mining heritage. These podcasts are intended to offer some insight into the work that we do and why we do it, and we hope that you will find them interesting, and we would welcome any suggestions for content for future podcasts as these series grow. Without further ado, let's get into the next episode. Thank you.
Hello and a very warm welcome to our next episode of our Confidence in the Coalfields podcast series, a podcast where we bring industry professionals together to discuss our collaborative working and the value we bring to those looking to buy or sell their properties or land for development in coalfield areas. Today I'm delighted and very excited to be joined by John Bagley, Principal Policy Manager at UK Finance. So John has been a chartered surveyor and has also been in property since 1997, and personally is a bit of a musician. He's been a church organist. He's also been in the choir since he was 17, and he's also played in a band, so he's very musical. And finally, he's also a black belt in martial arts. Hello, John. What an introduction.
Yeah, two completely opposite hobbies, but not. I probably just need to clarify, not quite black belt, just that one belt away still, but close enough to claim it.
Fantastic. I'm also equally delighted to be joined by Steve Meredith, who's one of our core team leaders here at the Coal Authority in our mining information and planning team. Hi, Steve.
Hi Lisa, hi John. Yeah, my bio's not quite as exciting as John's, but I do like going to see live music. So maybe one day, John, I'll be in the crowd for one of your gigs.
I'm not sure about that, but yeah, if you're more than welcome.
So, starting with you, John. So tell us a bit more around your career history and how you actually got to working for UK Finance.
Okay, probably quite a. I'll keep it short because otherwise I could be here for a long time. So I've been involved in property for a long time now, actually, and I started out in a state agency, and that's where my musical link kind of played its part, because I used to play cornet with a chap who owned one of the biggest estate agencies in Warrington, and that's how I first got into it. Yeah, I qualified in 97, be a chartered surveyor. Ever since, and from jobbing residential survey and valuer type person to working at head office for the then Halifax bank, and that's where I got into dealing with litigation and surveying and valuation complaints, and my career sort of took the path it did into sort of more policy. So I was the surveyor's ombudsman for a number of years, and that got me into a lot of policy with regulators and government, and from there RICS valuation director, technical director for a large corporate resi survey firm, and into UK Finance. So very much around mortgages, valuation, policy, government regulatory sort of standing and information for a good number of years.
Fantastic. And tell us a bit more around your current position in UK Finance, and a bit more around UK Finance's actual function.
Yeah, no problem at all. So UK Finance, I'll start with UK Finance if that's okay. So it's UK Finance itself is an amalgamation of a number of trade bodies. It merged in 2018 with the likes of the Council of Mortgage Lenders, British Bankers Association, and a few others to form UK Finance. So we essentially represent, as a trade body, almost the entirety of the UK financial services industry. Okay. So as a trade body, obviously it's about representing members' views, but it's also making sure that we represent the interests of a sort of stable financial services industry. So if you look at our strap lines, and actually they are pretty good to explain what we are. So it is about championing a thriving financial sector, and building a better society. So it's the financial services sector and society, and promoting a safe, transparent, and innovative financial services industry. So it really is what we do and what we touch. Almost covers every single bit of the financial services industry, even in the UK and beyond as well. So in terms of my world, it's as the title suggests, it's mortgages. I'm a principal within the mortgages team. So we, as a team, collectively deal with everything you can think of around the retail lending mortgages world. My particular role, which kind of reflects my background, it's around property risk,
Yeah.
Property risk related matters, valuation related matters, home buying and selling, so anything to do with the home buying and selling journey. And there are various sort of work streams and policy procedures going on at the moment. And then also the UK Financial Lenders Handbook. So if you're not familiar with what that is, that's almost what it is. It's the manual for lenders to tell conveyancers what they want from the home buying and selling financing journey. So yeah, so it's very much residential property, very much survey and valuation, and it's a varied day, it's a varied week, and there's always something going on. It's probably fair to say.
I think that's very much fair to say in our worlds as well, Steve, isn't it?
Yes, we're always heavily involved in the conveyancing process. We do realise for your aspect, John, mining is a small part, but clearly it's a big deal to us.
And it's a big deal to the consumer. You can't forget when we
Indeed.
Collectively view the house of our dreams, we want to buy that house, don't we? And when something gets in the way, then we want to be able to resolve it as effectively and as quickly as we can do.
We're going to keep things pretty focused today on the property market, because I think that's where we share, a common goal. We've seen some significant changes in mortgage rates over the last year. The cost of living has certainly got tighter, and the impacts of mortgage rates has been fairly turbulent. I think it's been fair to say. So, what direction of travel, John, do you think things are going to be heading in?
I think that's a real fascinating, interesting question. Yeah, I mean, it's probably fair to say since September 2 years ago-ish, the market has been turbulent. We did see a number of successive rises in Bank of England base rates. We saw some very sort of significant shocks with the Ukraine war, and then also sort of the aftermath very much of the COVID era with supply chain restrictions and those impacts on inflation, and the Bank of England's target of reducing that to 2%, which we're not a million miles away from at the moment. Then of course we have the general election, which is, as we're talking today, next Thursday. So to an extent, what happens on July the 5th, what's going to happen with the market there. What do we know? What do we know in terms of stabilization of inflation? We know inflation is back or close to where the Bank of England wants it to be. Markets are discussing a reduction in interest rates. To what level is difficult to say and when. Probably a good barometer actually is the swaps rates, and it's worth having a look at the swap rates, and they're kind of a good indication of where the market thinks the interest rate direction of travel is going to be. And if you compare the swap rates from last year to this year, and it goes through sort of the various 1, 2, 5, 10, 15, 25 years, it's at a lower level than it was 12 months ago. So I think given where the swap rates are indicating inflation back almost to where it needs to be, there's lots of commentators say that interest rates will start to reduce as 24 goes on. I think that's probably a fair summation of where it's going to be, but it's to predict and to have a crystal ball here is
notoriously difficult.
Yeah, and if we had that crystal ball, we're probably on a Caribbean island somewhere. But yeah, the indicators are far more positive than they were 18 months ago.
It's always good to hear.
I think if we look at the completions as well, what really interests me is the average time for completion if you look at certain areas of the country. So if you look at Scotland, for example, on average they take 33 days to complete, as opposed to England and Wales, where we know it's on average about 3 months. And yeah, Scotland obviously do things differently. You know, they've got the home report when selling a property, which contains, you know, vital information about the property, where you've got the energy report, the property questionnaire, and the single survey. But what types of kind of issues do you regularly see, John, for people obtaining a mortgage? What do you think slows those transactions down?
I think you're probably kind of given a good summary of the key differences and also the key challenges.
Yeah.
So when we look at the market north of the border and the single survey and the home report and the provision of far more information upfront at the start of the journey. So when you get to the point of making an offer, you have an awful lot of information available immediately. Whereas south of the border, we are still very much you market the property, you have a look and you make the offer, and that's the point where all the various people in the food chain start to gather the information that they need to gather. And the consequence of that quite often is that issues that which might be available to determine upfront if you were to adopt the kind of Scottish model. They don't come to light until further down the process, and often it's about clarification and matters that lenders need to know about, that we as consumers need to know about, and therefore, how much would a more upfront type information gathering existence gain the market? So I'm going to kind of link it in with the trading standards and the CPRs, which were very much sort of updated November last year, and that's really about gathering much more information at the start of the marketing process. So when the property goes onto the market, there's much more information available to all people in the food chain, and I think that will really start to pay dividends in terms of consumers can make a much more informed buying decision at day one. And therefore, all the people in the food chain who need to provide the advice, who need that information to make a decision about whether the property is suitable for a mortgage, whether the legal community has to provide advice around certain matters, to have that much more upfront, should hope to start to reduce the length of time that the home buying journey is south of the border. As you say, it can be pretty long from that very first point where you make the offer, you fall in love with the property, you want to move tomorrow, to the point where you actually complete is quite often many weeks later.
It's kind of getting back to the HIPS packs, isn't it? Almost.
Yeah, it's kind of one of those HIPS is kind of one of those phrases where you're almost quite nervous mentioning it. But yeah, if you go back to 2004 and the home information packs, and they came in part and then they were withdrawn eventually. But yeah, to have that information for us all to have at the very outset of the consumer journey, and that's whether that's us as buyers, whether that's the valuers, whether that's the lenders, to have that information so if there are any problems, and you can deal with those problems far more effectively and faster than knowing about it 4, 6, 8 weeks after you made the offer, and therefore what impact does that have on the chain as well.
Absolutely. So we'll talk a little bit around mine entries now, John. This isn't a new thing. The Coal Authority have been positively and proactively managing the legacy of coal mining on behalf of the government for the last 3 decades now, so since 1994. What I'm really interested to hear is your perception around mine entries. Do you think mine entries make lenders nervous?
It's about risk. It's probably the best way to answer the question. To say, does one particular issue make a lender nervous? A lender is wanting to lend responsibly. He wants to know that his asset is secure and safe. It also has a significant duty to the borrower as well. So, we could bring in consumer duty here, which strengthens the obligations on lenders about responsible lending. They want to make sure that consumers are not put in foreseeable harm. So you have sort of various strands to the question, really. So is it mineshaft per se? No, it's not. It's about making sure that there's no unforeseen risks to the security of the asset from a valuation perspective, from a financial perspective, from a borrower wanting to buy the property perspective as well. So where there's anything which materially might get in the way of that, so whether that's the proximity of a mine shaft and the potential risk to the damage to the building, as a responsible lender, then the lender would want to know more about that particular issue. What's the impact on the property? Does it affect valuation? Does it affect the marketability? Does it affect future saleability? And what are the known risks? What are the unknown risks? And therefore, as a responsible lender, you can make a reasoned decision whether to still go ahead and grant the mortgage or actually say, there are significant risks to the building, so therefore it's not suitable for mortgage finance with the information we have to hand. It's probably quite a long way of answering, but I think it's probably quite important to sort of bring in the various strands to the decision making process in whether a property is suitable for mortgage finance.
Yeah, it's very interesting to hear your views on the perception of risk there, John. I mean, obviously, I suppose in an ideal world, lenders would like the Coal Authority to step in and say mine entries pose absolutely no risk to a property. But the reality is that, unfortunately, you can never say never. I suppose where the Coal Authority has been doing a lot of work is highlighting the statistical low likelihood of anything of any risk associated to these mine entries. I mean, I'm sure you may have heard these before on other outlets from us, but just a few stats for you that only 21,000 of the mine entries in the UK are actually within 1 metre of a residential property, which is an incredibly small number when you consider that 1 in 4 properties in the UK actually lie on the coal field. And when we're looking at the actual risk posed by mine entries, i.e., is anything going to go wrong with them? In the last 10 years, we've only had 99 hazards associated with mine entries in residential areas, which is 0.05% of the mine entries in the database. And looking at it more recently, as the Coal Authority is now a statutory planning consultee, we've got a robust permit system to make sure that a lot of risk is mitigated before development. In the last 3 years, we've received just 11 hazards associated with mine entries in residential areas. And I always like to tell you that that's 0.006% of the mine entries in our database. So yes, we can never say never that it won't be a risk, but hopefully people can listen to the Coal Authority and we can try and just offer that reassurance to lenders, valuers, homeowners, house buyers, house sellers, and insurers alike. I suppose that's the main gist for the work that me and Lisa are doing, and part of the reason why we're here today.
Yeah, and it's about the assurance, isn't it? I mean, it sort of feeds directly to what I've just said about risk, and therefore, if there's a risk event or potential for risk event, what's the likelihood of that happening, and therefore, if it does happen, what's the consequence of that? And I think one of the powerful sort of parts of the Coal Authority is, there's also a route to redress if something happens, and I think it's also making sure that all market participants have full visibility of all the facts, and therefore you can make an informed decision. And if we go back to the role of the valuer within the mortgage journey, well, every property has a valuation. Sometimes it's not a physical valuation, but where there is a valuation of a property, then part of the consideration is that the property is readily saleable and marketable. And sometimes with that is a lack of sort of complete facts can distort the decision making process. So I think part of this, there's some fascinating stats there, Steve, that you just said, and they are particularly low percentages versus the overall population in terms of the UK housing stock, and it's about assuring lenders, assuring consumers, assuring insurers actually, that if there is a risk, there's a manageable risk, and therefore does the decision making process change because of that?
Definitely, like I say, the statistical likelihood is incredibly low, and I suppose what we're also trying to publicise and make more well known is that in the slim likelihood that anything were to go wrong, you in the vast majority of cases you're covered by government statute under the 1991 Coal Mining Subsidence Act, which is part of the Coal Authority's statutory duty to make good to a limited value any repairs from damage caused by coal mining and mine entries.
I think, one of the kind of questions that we see that comes up sort of time and time again is around mine entry treatment details. Myself and Steve have, we've done some mining masterclasses on these, but if we don't have the treatment details, that doesn't necessarily mean that mine entry hasn't been treated.
Well, yes, you definitely stole my line there, Lisa. That's my mantra that I like to repeat quite often. Yeah, there is sometimes an ill-informed perception that an abandoned mine entry, wherever it may lay, is a huge void lurking just beneath the surface. That's a massive risk. We get phone calls from people who, when their mining report has revealed a mine entry, say at the bottom of their garden, phoning us desperately asking whether it's safe to let the children play in the garden. In the reality of most things, these features have often been there for 100 years plus from historical mining. They've long since become no longer visible at the surface, and they haven't posed any ground stability risks for the duration of that lifetime. I suppose the reality is quite often when a coal mine had finished working. Before nationalisation in the 1940s, it was a local agreement between the landowner and the mine operator as to how that mine entry, and the mine indeed was abandoned. Quite often, the mine entry was filled with material from the site, and these days it's no different to the surrounding ground around it.
Yeah, and it is about information, isn't it? It's about education as well. It's fascinating to hear the way you talk about it and the information that's available, and the more assurance that can be given to the market around things like mine shafts and the overall risk and the overall chances of a defect occurring. That's kind of part of the journey here, isn't it? And also from a buyer's perspective, for wanting to buy a property, for wanting to sell, somebody has to buy the property, somebody wants to sell, and as a buyer, the more information that all in the food chain can have around the potential for something here, because actually you can extrapolate this for a whole range of potential defects that happen to property, and there's a whole range of potential issues that can be there, and it's about visibility of information, visibility of what might happen, what's the potential risk of that, what's the likelihood. If there's a fairly high likelihood, then what's the route to remediation? And that gets back to the other comment around the statutory existence of the Coal Authority and the protections in place as a result of that.
I was just going to say, John, it's interesting you talk about that desire for the visibility of information, because unfortunately, this is kind of where the Coal Authority are hamstrung quite often, because these features are historic features. In instances, they were 150, 200 years plus, and the exact detail of how a mine entry was treated, it just isn't available. So when we're searching our historic records for information, I suppose what I'm trying to say is that a lot of this historic information, if anybody has got it, we have, and we'll be able to find it. But unfortunately, in some cases, the details of that treatment just don't exist and will never be known without intrusive investigation.
Yeah, it's a challenge, isn't it? I think again, it's about visibility of as much information as possible, and how that if there is missing detail because of the length of time that's elapsed, what's the potential consequence of that? And again, if it's putting my consumer hat on, if you're a consumer and there's a gap in information and a potential risk, then you need to consider what the impact that is to you as a person. Then also from a lender's perspective, they also have to consider, well, going back to sort of my previous comment, is the asset safe? Is the financial security of the property safe? And ultimately, the mortgage is secured on the property. And the worst case scenario, if they have to repossess, can the property be sold in the open market? And that's a sort of the overall consideration that as a lender they have in assessing the property for the mortgage. Clearly, there's a person thinking, but in terms of the property.
I think it's that reassurance as well, isn't it, for people knowing that the Coal Authority are here to support customers, communities, the people we work with. It's been incredibly valuable, John, having a relationship with UK Finance, some of the lenders, we work closely with the Building Society Association, and surveyors as well. It's having those relationships with everybody involved in the buying or selling of property to ensure that we can provide that reassurance, that education. Mining is a very niche subject, but it's something that we've got, upwards of 400 members of very passionate individuals at the Coal Authority, really, championing in confidence in the coalfield. We want people to feel comfortable and happy with their properties, and that's why we're here, to manage that legacy of coal mining.
No, I was going to say, it's definitely interesting. You talk about mining being a niche subject at the moment, and it is. We've got an entire generation of people in the UK at the moment who've grown up without an active mining industry, which we want people that, if they don't understand it, feel free to just approach us and we can give them information, education, whatever we've got. We're happy to depart that in the interest of just making sure everybody understands and has a realistic understanding of the risk that is posed by mining.
Yeah, I think you're right. And the work that you're doing across I keep saying the food chain, but the food chain of which there's 5 or 6, if not more, sort of key sort of pots here of people who are involved in roles, and the more information that can be given to everybody, from the starter, from the very start of marketing to the very end of completion. There's like any kind of topic, the more information that everybody can have about the topic is of huge benefit to all. It's always the biggest challenge of any kind of risk event is uncertainty, and uncertainty of any shape or form. If you sort of put a risk management hat on, the uncertainty of anything is always the challenge, and the greater certainty that can be given. But anything, we've historically had, for example, Japanese not being affected in the built environment, and we've changed guidance on that to give greater certainty to the market, and because the market invariably wants to buy, and the market invariably people want to sell. So it's making sure that there's as much confidence around that transaction as you possibly can give.
Absolutely. And it's been great for me and Steve. So we recently attended the Valuation Risk Committee in London, which was a great arena for us to speak directly with other lenders and to really start, building some wider relationships for the Coal Authority as well. And I'm really looking forward to kind of, continuing our work together, John. You've been vital in the work that myself and Steve have been doing, and we're, a massive thank you from us for that.
And it's about dialogue, and things like the valuation committee and other committees at UK Finance are a great way of being able to enter into conversations with the market participants that you need to speak to, and also beyond that, from the home buying and selling journey, there's also the estate agency world, there's obviously the legal world, the valuation world, and this knitting all that together, because we all play a part, and we're all intrinsically linked with each other for the success of the housing market.
Yeah, it's some challenge trying to get all the strands pulled together, as I'm sure
you're aware. There are many for sure. Yeah, I think it reflects the complexity of the housing market, doesn't it?
Yeah. Absolutely. Well, I'm going to start to bring the podcast to a close now, but thank you so much, John, for joining us today, and to you as well, Steve, for this episode. And thank you, everybody, for listening in. Until next time, thank you.
So we hope you found that podcast interesting and insightful, as we've shown it on our social media channels. If you have any questions or further comments or any suggestions for future podcasts, we'd be really pleased to hear from you. So don't be afraid to get in touch. And we look forward to spending some time with you next time. Thank you.